So today we'll be talking about what is bid and ask price. So in forex trading, the bid and ask price represent the current market prices for a currency. Remember that there's always change in the currency, the amount of a currency with time. So the current price is what we call the bid and ask price. So let's first of all talk about what is the bid price. So the bid price, this is the price at which a trader can sell a currency pair. Meaning this is the amount a trader is allowed to sell a currency pair. This is the amount available to sell a currency pair, particular currency. It is the highest price that a buyer is willing to pay for the currency at a specific moment. Now, if imagine if you are selling a currency pair, imagine you are selling a particular currency. The bid price is the price at which the market will buy it from you. Then the ask price, also known as the offer price. This is the price at which a trader can buy a currency pair. This is the amount a trader can buy a currency pair. So you can see the difference between the bid and ask price now. One is the amount a trader can sell a particular currency, while the other one, which is the ask price, is the amount a trader can buy a currency. So just understand this. It is the lowest price at which a seller is willing to accept for the currency. If you are buying a currency pair, the ask price is the price at which the market will sell it for you. So picture describing what I'm saying, that the bid and ask price. Imagine this is the bid, this is the bid price. Let me on the laser so that you see what this is the bid price, the price at which buyers are willing to buy from you. Why this is the ask price is the price at which the the sellers are willing to sell to you. Then one thing in common is that the difference, we come to this, but I just wanted to know that the difference between these two price, by the time you subtract this from this, the difference is what we call the spread. So this is an example of the euro to US dollar. So let's look at an example very quickly. For example, let's consider the euro to USD currency pair. The bid price is 1.1200 and the ask price is 1.1205. Remember the price, the bid and the ask price, you know their difference. If you want to sell, imagine now you want to sell the euro to US dollar pair, meaning you are selling the euro and you want to buy the dollar. If you are selling this market, meaning you are selling your euro and you want to buy US dollar. The bid price of the bid price now is 1.1200, is the price at which the market is willing to buy euros from you. Then if you want to buy the euro pair to the euro to US dollar pair, meaning you are buying the euros with the US dollar, meaning you are buying the euros and you are selling your US dollar. Imagine if you are selling this market, you are selling the euro and you are buying the US dollar. Imagine you want to buy this market, you are also buying, you are buying the euro and you are selling, the euro and you are buying the US dollar. Then if you want to buy this market, you are buying the euro and you are selling out the US dollar. The ask price is 1.105, is the price at which the market is willing to sell the euro to you. The difference between this ask and bid prices is what we call the spread. In this case, 5 pips is the smallest price move that a given exchange rate can make based on the market convention. The bid and ask spread is how brokers make that. This is how brokers make their profit from you. Actually, that's why you see most forex brokers, they don't take commission. They only have your money from the bid and ask price spread. But with time you will understand this more better. But just know the basic of the difference between the bid and ask price. One is about the amount where sellers are willing to sell to you, while the other one is the amount buyers are willing to buy from you. That is just it. Then we jump into what is lot size in forex market. So in forex market, lot size refers to the quality of a currency pair that is traded. There are three main types of lot size. We have the standard lot, we have the mini lot, and we have the micro lot. First, we talk about what is the standard lot. Standard lot is the largest trading size and consists of 100,000 units of the base currency. For example, if you are trading the euro to US dollar pair, a standard lot would be 100,000 euros. So let's come to the mini lot. The mini lot is one third of a standard lot and represents 100,000 units of the base currency using the euro to US dollar. Example, a mini lot would be 10,000 euros. Then for the micro lot, a micro lot is 100 of a standard lot and equal to 1,000 units of the base currency. Continuing with the euro to USD example, a micro lot would be 1,000 euro. Okay, now I know you are confused, but let's talk about example. Let's break this down to an example. Let's say you want to trade the euro to US currency pair and the current exchange rate is 1,000 is 1.1200, like what we make in the bid and ask price. Yes, have the different lot size we translate now. This lot size is very important, especially when you want to place trade. This is where you will have to set the lot size you are using, and this depends on the amount you have. If you have very little amount of money, you have to pick small lot size so for risk management and every other control to control your risk. But let's talk about what standard lot first. So for a standard lot, which is the 100,000 units, you decide to buy one standard lot of euro to USD. This means you are buying 100,000 euros if you pick a 100,000 units of standard lot size. So if the exchange rate moves from 1,000 1.120 to 1.1210, that means you would make a profit of 100,000. 100,000. So this is like, by the time you subtract this this from this and you add this figure, this is the amount you are going to get. This is your profit. Meaning if you have two 10 pip move added to this particular price, you are making $100 by using this 100,000 units of standard lot size. So let's go to the mini lot size where we have 10,000 units. I hope you understand this. We'll come to this mini lot size so that you get more understanding of it. If you decide to buy one mini lot of euro to US dollar, the same example, this means you are buying 10,000 euro by using this mini lot size. If the exchange rate moves from 1.1200 to 1.1210, you would make a profit of 10,000 units. That means if 10 pips add to this price, by the time you subtract this from this and add this figure and multiply it by this figure, this is the amount you make. You make 10 US dollar. Let's move to so talking about the micro lot. the micro lot, you decide to buy one micro lot of euro USD. This means you are buying 1,000 euros. If the exchange rate moves from 1.1200 to 1.120, that means imagine 10 pips add to this, depending if maybe you buy or you sell, and you make a profit of 10 pips adding to this current price, which is this, changing to this now, you would make a profit of 1,000 units. So that means if you subtract this from this and you multiply it by this unit, this is what you make micro lot. For beginners, this is what is advisable for a start. So remember the example illustrated potential profit, but trading involves risk. And the market can move in opposite direction, result in losses. Proper risk management is crucial in forex trading. Lot sizes allow traders to control the size of their position and manage risk more precisely. Smaller lot sizes are often used by beginners, like what I told you before, or those with limited capital, or if you have very small capital, as e allow more flexibility in risk management. As traders gain experience and confidence, they may choose larger lot size based on their own trading strategy and risk tolerance. So coming about talking about the this little calculation of, like what I told you, calculating your risk, formula for calculating this lot sizes, the account size, multiplied by the pips divided by the units, gives you the lot size. Different from my own calculation, let me not confuse you. My own calculation of getting this right is, imagine the current you bought at this price and you make a profit at this price, and you use the micro lot size of 1,000 units. By the time you subtract the money you invested from the money you have make, and you multiply it by this unit, micro lot unit you used, this is the amount you are going to get. And using your MetaTrader 4, this is where you set lot sizes before you trade. It's advisable to set lot sizes before you place your trade. Thank you.